Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1846th edition of Short-Term Trading Live with Oscar. Good evening, traders. This video is coming at you on a Sunday night for Trading Monday, well, Sunday through Monday. That is 10/22. 2018. I know that says 11/22, but it's 10/22. So it is for October 22nd, 2018. Traders, remember, this is a very risky game. Trading futures, trading stocks, trading ETFs, trading anything these days is a very, very risky game. Never, ever trade without stops. Never trade with money that you cannot afford to lose, and I mean seriously be able to afford to lose it. And always put those stops in first. Come on down to livewithoscar.com. Hang out with me in my live trading room, and I'll help keep you calm, poised, and teach you how to get through these rough and tumble markets. So, for trading on 10/22/18, or October 22nd, I left you off with a video mid last week and said it's looking flaggy out there. And look what has happened since. The flags have formed. The market has been dropping. We have certainly been trying to go short, if not getting filled on going short every day at the Trading Academy, the OMNI Trading Academy at livewithoscar.com. And we are looking at these as bear flags, kids. Now, I think we can take projections off these flags. Our projections, they are not predictions. Projections. We're projecting 26.95 conservatively off the S&P flag if the flag starts to work, and it looks like that's what's happening. And aggressive projection would be 26.41 on the downside. Now, just so that you'll remember, the last time we had a drop in February, we dropped to somewhere near 25.50 maybe in the S&P. So I'm looking for it to hold, or at least the projections are with at least 100 or 80 to 100 points higher than the previous dip. So let's not worry about it going too far, too fast yet. But these would be our targets if this flag starts to pan out. We are below the 200-ball moving average. We're there right now. It settled there on Friday. This is a bear flag. Markets have been repricing due to the higher interest rate that we see out there. So I do expect that we will come down again on Monday. So that's your E-mini S&P. Let's look at the Russell. On your Russell, which was absolutely the leader, and the first one down looks pretty darn bearish to me, kids. I don't see a single bullish thing about this. I see projections taking us, below 1,500, 1,505, somewhere down there, off of this flag alone. And this just does not look good for the short term. And I'm talking about the short term, not the long term. This is for short term trading the next few days moving forward. Let's look at the Dow. Now, the Dow is interesting because it is the only one that has built its flag above the fund manager's blue light special, the 200-ball moving average. If you look, this black flag is built above that average. It's the only one of the indices, but at least for now, the Dow is above the average. But that is a bear flag, and it does project lower, just to let you know. Make sure you join me at livewithoscar.com. I send out recommendations where to buy, where to sell, where to place your stops, where to take your profits every day. If you'd like those recommendations, come to livewithoscar.com. Look us up, join our Platinum service. Make sure you look me up. I'm on Facebook, Twitter, Instagram, you name it. We're everywhere. Take a look for us. Now let's move along. Transportation average, kids. Now this is another one of the ones that really started to fall down hard. Built a big flag below the 200-ball moving average. Does have projections to drop lower, and we are expecting that to move lower as well. Again, this is day trading now. We're not looking for the market to have topped out and the world's going to come to an end financially. That is not what I'm telling you right now. I am saying that this is simply short-term trading. We are using these formations called flag formations to give us projections on how much lower we should go. We know we're moving lower because of the interest rate spike that came that slightly unexpectedly. The Fed raised rates. We knew that was coming. Traders selling bonds down, rallying up those interest rates higher than we expected is what started to cause the repricing, as you see here in our indices. But this is not a call for the top. I just want you to know that. That's what the red X right there. It's not a call for the top. Certainly not yet. Now, there's another interesting little chart out there. The gold, which I showed you in my videos last week. And I said, take a look at this chart. There's a very interesting chart, the way gold trades around the 200 bar moving average, which would be this, pointed at this. So you know we're talking about the 200 bar moving average and gold. So, right here, you get above that 200 bar moving average. It gets above, stays above for some time, then it finally breaks. But the idea was when it got above, it stayed above. Then it finally breaks, and when it gets below, it stays below for a long time. Now, these are weekly bars. Each one of these lines represents a full week's 5 days worth of trading. So you break down 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 60, 70, 80, 90 days below the average when it breaks. Then it gets above. Look at all the time it spends above. It gets above and it stays above. Look at all the weeks it spends above this average. Then it gets below and it goes into another one. You know, every one of these is 5 days. 5, 10, 15, 20, 1 month, 2 months, 3 months, 3.5 months, almost 4 months below the average. Here we are now, at the average once again. So an event takes place when you get to the average. If you get below it, an event takes place. If you hold it, an event takes place. If you get above it, an event takes place. So get ready for something serious to happen in gold. My daily Omni is fluttering a buy. Just letting you know right now, you have to respect that you can't get over that average till you get over it. On the weekly. On the daily, just to let you know, my Omni is starting to flutter a buy. Come to livewithoscar.com. Come to my live trading room. More details about gold and what it's looking like to the Omni. Then there's this, traders. This is the chart I've been waiting to show you. Don't get so nervous yet. And here's why. Dow Jones Industrial Average. When we dropped last year, we dropped 3,256 points. My apologies. When we dropped earlier this year, do you know when it was? Only Feb this year, a little bit earlier. Right here, I'm going to show you the whole chart in a moment. November 10th and 11th, traders, before we go any further, is my OMNIACS Bash. You are all invited. It is an open invitation. Just need to call us, email us, write us. A simple RSVP is all we're asking for. We want you to come to this OMNIACS Bash. It is November 10th and 11th. We've got tons of OMNIACS showing up. We'd love to have you out here in Las Vegas. Book your tickets. Come join me. It's a 2-day party. Entertainment, live music, you name it, markets. We're going to have a blast. I want you OMNIACS out there. Please RSVP at livewithoscar.com. Give us a call, 702-629-4755. If you'd like to come by, just RSVP for us, and we can do a head count and know how much fun we need. So call us, come to the site, let us know if you're coming to the bash. Back to the chart. Traders, last time in Feb of this very same year, this is Feb 2018. I know we have short-term memories when it comes to trading, and that's okay. It's part of the game these days. But this is only Feb 2018. And we had this massive drop starting Feb 2018. And it was to the tune of 3,256 points. We have dropped since this high only 2,052 points. And we recovered to make an all-time new high after that drop. So I am telling you right now, we can drop and reset this far and still not have a problem. We're only down 2,000 points since the high tick to the low tick. And we dropped 3,256 points from the high tick down to the low tick on that last crash. So I'm here to say, this is Oscar telling you, please don't get your bunties in a pants. Please don't get your panties in a bunch just yet. Let me try that again. Please do not get your panties in a bunch just yet, kids. We are not calling top on this bad boy. Are we calling for a lower segment? Yes, we expect it to go lower. Should it be a top? You know, I don't think so. And then there is this one crazy average right here. We almost got down to it on that last drop. I'm talking about the last drop in Feb 2015. If you follow this bouncing ball, we almost got down to this average right here. And then we held it all the way. Except for this little, we basically held it with only a 1 or 2 day drop under it. and we just got to it on this drop. So, there's reason to think maybe it's the bottom is in now, but I don't think that's the case. I think we have a little more to go because of these bear flags I've been showing you. But again, please don't get your panties in a bunch just yet. No one's calling the top. That's a good financial technical analyst just yet. So sit tight. Now, looking at this chart once again, let's show you this. This is what happened after we had the 3,256 point drop. This is what happened after that. What happened was we rallied big time. We had that drop. And then, of course, when the drop was finally over and you had that little test of it, you continued to rally and put in all-time new highs. We're only down 2,000 points as opposed to 3,200. 2,000 as opposed to 3,256, 2,052. We're not there. We didn't take out the previous lows. You cannot call this dead yet. Remember, kids, do not get your panties in a bunch just yet. Come on down to livewithoscar.com, and remember, keep your emotions out of trading. One of the best things you can do, in my opinion, to help try to keep those emotions at bay is put your darn stops in before you trade. And then say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Rock and roll traders, I will see you all at livewithoscar.com.